Welcome back to Bunnex Investment Group. In this video, we are going to talk about the 3 secret market maker moves everyone must recognize to make a profit within trading. So this is what market makers try to achieve each and every time they move the markets. If you watch to the end, you learn how to see what we call accumulation, manipulation, and distribution before it occurs. Basically, this particular market structure with high accuracy and simple steps to follow for you to validate those days that it comes and give you accumulation, manipulation, and you trade off this particular distribution. I'm going to give you the daily prediction strategy that you use to validate the days that are valid to trade and combine it with the intraday AMD sequence, which we call accumulation, manipulation, and distribution. These 2 combined will give you an upper hand to trade the market with high accuracy. So basically, we are not going to go in circles, but go straight in what you are going to require for you to trade the AMD sequence. So this is the daily prediction strategy, whereby you are going to be looking for days with this particular arrangement. This arrangement will look to have the high and low of day, and then the previous day, the next day, will need to break below this particular low, like in this particular case, and close below that low. So we are saying mark the previous daily low or previous daily high. After that, see the current candle closing below the previous daily low. Like in this particular case, you can see the closing price is here below this particular low. Then third, we will anticipate that the next candle must touch or break through this low. So in this particular case, we are saying the next candle was actually a bearish candle, which is likely to break or basically test this particular low price of this candle. What we mean is we can see this particular daily candle, right? And this particular daily candle. To predict the third daily candle, we were going to say this low, which is this in white, and after that low we can see that the market closed right below this low, meaning that the next daily candle was going to break or test this particular daily candle, right? We can see this low of this particular candlestick, right? After that low, we can see that this particular daily candle broke and closed below that low, and the following daily candle, which is this one, it was definitely going to break and even test or break the low of this particular candle. If we check again, we can see that this low in white, we had this low in white, and this next candle broke and closed below that low, meaning that this particular candle, we were expecting it to break this low, right? So this is basically to give you the bias. Here is now the upward bias. We can see the high of this candle, it was broken and the candle closed right above that high, and we can see the market closing right above this high, meaning that this candle actually broke this high, meaning we had an upward bias. We had another case where we can see this high being broken and the candle closing right above that high, meaning this we were going to predict that it was going to take this high. You need to repeat this snippet so that you fully understand before we move over to the next stage. All right, so basically the next candle which would have predicted will require us to have the knowledge of the market maker daily template, whereby we are saying the Asian session will actually be initiated as a consolidation, which we are calling the accumulation phase. Outside the Asian session, we'll actually require to have 3 swipes to the low, like in this particular case, and we would look to get an entry at the start of the distribution phase, right? So this will actually be looked to exit at the high of the previous daily candle. So we are saying the market maker starts by building accumulation, they accumulate, and after that they will actually induce what we call a manipulation. This is to convince traders to take the opposite direction which they intend to take. So this usually comes into 3. We can see 1, 2, and 3, or basically it would be 3 candles in one particular direction, which are basically swipes. So after 3 swipes manipulation move, they will then shift towards the high of the previous day or low of the previous day. So this image shows what these guys are trying to achieve almost every time the market moves, right? So let's now build a strategy with what I have explained already. We are now saying predict the daily candle bias, right? By predicting the daily candle bias, you are going to be looking for 2 candles or 2 previous candles on your chart. Look for candles whereby it's either the candle is closed below the low, and you'd actually anticipate that the following candle is going to break this low. So this daily that is going to come is going to be a bearish bias. On the current day, observe the AMD. On this particular day, we want to see accumulation, manipulation, and then distribution. We enter at a candlestick reversal pattern after 3 swipes to the high or 3 swipes to the low. Pin and enter at the 3 swipes stop hand and look to exit at the previous daily high or low. Let's have examples to understand this. Before we go over the examples, let me quickly show you something powerful. Our profitable trading algorithm called Stophunter Pro. This trading robot took a small $1,000 account and grew it into over 500,000 in just 5 years. It's designed to catch the exact stop hands market makers use. Here's what you could have got on a $100 account. We are going to use the previous quarter, which is May 2025, right up to the time of recording this video, which is 18 August 2025. So I'm going to start off this test right in front of you so that you'd see we are risking 5% of the $100, and this is what we were going to get. $100 initial deposit, and then we were going to get 291 is our profit. Here is the profit by month ratio. If you need this particular trading robot and you're serious about leveling up your trading, fully automated and no stress, no emotions, use the link that I've left in the description box below to get your 249 lifetime copy. All right, so here is the example. I've actually marked the day, which is 12th of August 2025, and it is the same day here, 12th of August 2025. What can we see on this particular day? We can see that the candle in subject is the one that I've put this dotted white line. On this particular dotted white line, we can see that it actually broke the high of this candle, and then it closed right above that high, meaning that on this particular third candle, our bias was going to be bullish, right? It was going to be bullish. And in that instance, we are now saying we want to see the AMD sequence in this particular day for us to enter. So this is the day, the first day, and the previous day. It actually closed, the closing price was here. This week was actually this particular price point, and it closed right above the high of the previous candle, which was actually this shooting star. Then our candle that we would have predicted was going to be this one. We had the Asian session, accumulation, and we had 1, 2, and 3 right as our 3 swipes to the low. We can use the TDI confirmation, or we can use any other confirmation entries for us to see the end of the stop hunt. And we can see this particular price point. This price point or this low is actually this low on this particular day. And then we can see the market went straight to this particular point. Unfortunately, it did not break the high as we would want, but it later done so on this particular day, which is now this day, right? So basically that is how you will be operating, and you will actually get a lot of trades if you look at several pairs. On that note, we've come to the end of today's video. Check out our free educational Telegram channel via the link that I've left in the description box below. See you in the next one.